kind of the modern new insurtech kind of category that's under this broader fintech sector that's really taking hold and disrupting the world. And so what we're doing is we're using our deep integrations with property management software systems to look at the data related to the move-out ledgers.
Welcome to the Property Management Brainstorm Show with Bob Preston. Bob is the president, owner, and broker of North County Property Group, the fastest growing and top-ranked property management company in North County, San Diego. This podcast is for property owners and investors who are considering hiring a professional property management company to manage their property assets. You'll hear from leading professionals on the best practices surrounding the San Diego rental market, what's involved in successfully renting your property, and how to make sure your property is managed correctly. Now, here is your host, Bob Preston.
Hello, brainstormers. This is Bob Preston here, your host, broadcasting from our studio at North County Property Group in Del Mar, California. If you're new here, please subscribe so you have ongoing access to all of our great episodes. And if you like what you hear, please pay it forward with a positive review. On this podcast episode of Property Management Brainstorm, I'm continuing a series dedicated to the topic of security deposits. For most landlords, security deposits are one of the most challenging aspects of managing a rental property. It can be conflict-laden at the end of a lease, and in most states, there are rigid regulations and ever-changing laws which must be followed on when and how the deposit needs to be returned to the tenant. Another aspect is sometimes you might have a rental default issue with a tenant. So we're going to have a guest on the show today, Derek Merrill. He's co-founder and CEO at LeaseLock, a company promising to eliminate the need for security deposits. Derek, hey, welcome to Property Management Brainstorm.
Thanks for having me.
Excited to have you on the show. Interested to learn more about, your topic today, but I think a good place to start is just tell us a little bit about yourself and the concept behind LeaseLock.
Yeah, so I come from the technology side of things. I've my background is really born of entrepreneurship and really building new products and bringing them to market, particularly on the software and technology side is what gets me going. Grew up with computers, went to Berkeley, kind of at the tail end of the .com bust, but saw that everything going on there. It was very exciting. So naturally, I got into early stage kind of high growth startup world, and I co-founded two venture-backed startups prior to LeaseLock. Both exits, I call them kind of singles and doubles. And as an entrepreneur, you keep doubling down. And
I've had a couple of solid doubles in my background too. Never a home run, but
exactly.
A couple of solid doubles.
Yeah, I haven't had the home run yet, and I'm looking for the grand slam. It's been fun. I always tell everyone I really don't work. I've never worked a day in my life because I love what I do. I just love to build, and I feel so blessed that I have the opportunity to do that through this vehicle. But this has evolved. I was in the ad tech space, and I was looking to kind of build technology and disrupt a new industry. And so I picked insurance, and I started building some things. I'm a product builder by nature, and kind of surround myself with engineers to go and kind of hack and then prototype and see if there's a need in the marketplace for it. And then, so I was building a few things, and I got introduced to my co-founder, Riken Cool, in 2014 through a startup accelerator here in Los Angeles. They're based out of Santa Monica called Mucker Capital. And they said, hey, we got this really sharp guy. We put a little bit of money behind him. He's got this really awesome idea, and he's got a great background in legal and insurance. And then we see you, Derek, on the technology and operating side. You guys might be a good force together. Would you guys want to talk to him? By the way, it looks like it might be insurance backed, and we know you're looking there. I'm like, of course. So I talked to Riken, and I mean, from the get-go, the first conversation, it was just kind of the light bulb moment went off for me. Riken got turned down for an apartment in New York City a few years prior to that. And he was a very qualified resident, in fact, offered to prepay the whole lease, and they couldn't do it. They wouldn't do it.
Really? We never turned that down.
Yeah, that's money. So that was a signal that something was clearly broken, right, in that transaction. And so Riken had a chip on his shoulder, and he's like, there's something wrong here. So he went through that accelerator program at Mucker, and I joined with him in 2014, and we've been on this journey to build LeaseLock since then.
And the whole concept of zero deposit,
financial instruments beyond that get in front of executing a lease.
Yeah, sort of reduce the hurdles from the time you see a property and you want to lease it to the time you're actually moving in.
That's what it's about, right? Isn't that what that prospect is? They want to live in that unit, in that home, and you as a property owner want to get qualified folks in there that can pay the rent.
Absolutely.
So we've gone through this process to really perfect the product and make it a very, very simple one.
Well, what is the product? Maybe we can start with that.
It's a very simple format. The resident is paying in about $30 a month, and that waives all the requirements of any deposit or guarantor. Anything, all of it's gone. So they don't have to come to the table with a bunch of money. They get their lease signed and they're in. So the value proposition on the consumer side is very, very clear. And by the way, that's all integrated right within that native online property management software system that you pay along with rent. There's no separate application or credit card you got to pull out. It's all natively integrated. Now, on the property side, there's a win as well, in that we provide over $5,000 in what we call lease insurance coverage on every single lease. So if there is a default, there's a skip, an eviction, or there's excess damage, we're there to cover it with that $5,000 in lease insurance. And we've really kind of created this new category called lease insurance. It really has combined the rent guarantee space and the surety bond space into one unified product. That is the simplicity of it, is both sides win. You have this really affordable move-in for the resident, eliminating all that friction, gets them in there fast. And then you have more protection through this lease insurance, $5,000 in lease insurance for the property. And there's a couple different flavors of the pricing and the coverage depending on the markets, but $30 for the $5,000 coverage is really kind of the bread and butter coverage.
So is it $30 total, $30 per month?
$30 per month, kind of like other insurance products. And that maintains that insurance coverage for the property as long as that resident is occupied there, that coverage stays for the property.
Okay. And the tenant pays the $30 per month?
$30. And it displaces that any upfront, whether it's a $500 deposit or maybe you had a conditional that would have had to pay 1 month's rent, that's gone.
Okay.
Or a cosigner, gone.
Okay.
Guarantor.
Rental default insurance, gone. Okay. So we'll get into a little bit more of the nitty gritty on that here in a minute. I'm wondering if there are any changes out there in terms of tenant landlord law that might be a driving force in the direction of making LeaseLock a popular choice as well. I mean, my understanding is that certain states or city ordinances are driving some of these adaptations.
Yeah. We're seeing that come down the pipe. Right. It started in some of these markets like Seattle markets and other similar situated jurisdictions where it really was around affordability. And because let's be honest, multifamily has had this rising rents, very, very great market in that aspect for the last decade. And so you have these challenges with affordability, and the place they go is around deposits, right? It prevents people from getting housing. And so they create all these restrictions around, hey, now there's a cap, and now you have to split it into installments, and you have to return it by a certain date, or you're subject to all these lawsuits. So they're just creating a lot of these regulations, lawmakers are, rightfully so, to help with that affordability challenge. But it creates just a burden on the operation side for property managers, because it just ends up being a cost center. So you're actually seeing a lot of thinking moving away from deposits just because they don't want to deal with the burdens of it. But now you're really at risk of absorbing bad debt because you have no deposits on hand.
Are you seeing the impact of COVID-19 as a further indicator of change that's coming, or perhaps making your solution more attractive? I mean, it just occurs to me that people come to us and say, hey, we can't afford your property anymore. We're going to move into lower cost housing, or they're still going to be up against perhaps a security deposit, maybe first and last month's rent. I mean, it's not cheap to move into a new place. So solutions like yours could potentially make it more attractive during this time where a lot of tenants are devastated financially.
Big time. We're seeing this COVID environment have huge tailwinds for our business for two reasons. If you think about the supply side, right, the property owners, what happens in times of uncertainty? There's a flight to safety. Insurance is a safety buy.
Safety net, yeah.
Yeah. So we're seeing that light bulb moment went off in terms of, we always like to joke, and we're so grateful for this. COVID really was a free Super Bowl commercial for LeaseLock that's running daily to multifamily and management and operator side. And because it's really awoken them to, wow, I am really at risk here of this changing future environment that I'm entering into. And it looks like it's not going to be a V. I mean, the market will tell you otherwise, but from a real perspective of the economy starts and stops here, it looks like it's changed significantly. And so now that really a flight to safety with insurance, and we're lease insurance, right? And when you think about $5,000 on every lease, that gives you all the warm fuzzies. Now on the demand side, that has even a bigger impact because of affordability. People are wiped out. It looks like they're using the cash that they have with this unemployment and the CARES Act to pay their rent, which has been good. But any savings they had, anything cash they had to create mobility towards deposits is gone. Mm-hmm. And so now you have this it's really now a requirement to help renters get over these hurdles that prevent them from getting into the apartments that they should.
I'm a believer that landlord tenant law is going to change forever. I mean, I think that there are just some more common sense aspects to all this that we're learning from COVID-19 that are going to have a long-term play as states start to look at the impact this has had on tenants, financial hardship, and affordability, kind of like you've already addressed. In fact, I don't know if you're familiar with NARPM, the National Association of Residential Property Managers, but I wrote an article that's going to be published in July, and it was about the financial impact of COVID-19 and some of the property management policies we still see out there in terms of zero tolerance, right? We have zero tolerance for people who are not paying their rent on time. And it's sort of like, well, you hear this thing, well, hey, we're all in this together, right? For COVID-19. And then you hear people still talking about that as property managers. You're kind of going, wait a minute, I thought we were all in this together. How does that fly, right? We have eviction moratoriums. We have these financial hardships for tenants that are real, not just, you can't just go out and demand that they pay their rent in today's market. So what are the alternatives? And I think things like this are going to have a long-term play in in being a landlord, and probably landlord tenant law in every single state.
Yeah, no, we see, that was the first thing we did. We picked up the phone and called our biggest operator clients. We work with the top 50s, right? Managers and owners, mm-hmm. right? Graystar, Pinnacle, hundreds of thousands of units under management, and then the owners that are the asset owners, their clients. And so, what they told us? They told us, look, we're going to go into occupational preservation mode, and we want to help residents because this was no fault of their own. They were good paying residents before this, and we're going to have to help do things like resident relief programs. They're doing things like payment plans, right? And push deferred rent out.
Yeah, rent forbearance plans and agreements, sure.
Yeah, stuff like that. Yeah, stuff like that. And so that's really the stance that we saw, and it was really great to see because it was really what America's about, right? It was really helping because it was no one's fault of this. Now, if you extend that forward, right, and the eviction moratoriums, now what do they hold true to that when these things get lifted? And we'll see. Right. But that's what they communicated to us. And again, I think a lot of the federal stimulus helped residents at least have the minimum money to pay the necessities, and they did mm-hmm. choose to pay rent. That's a fascinating thing.
So let me ask this, and then we're going to dive into the nitty gritty a little bit. So your program does provide for some degree of protection against rent default. Does that include COVID-19 financial hardship?
You know what? No one had a crystal ball. We did not have an exclusion for a pandemic,
right?
and I think no one could have envisioned that this would happen. So, any policies that, it's covered because it's not a named exclusion, and that was on existing leases that were covered prior to COVID. Like any insurance product, we're backed by the big A-rated billion-dollar reinsurance carriers. They go and they say, okay, now we need on future business moving forward, we're going to need to include a pandemic exclusion, because you would agree, and we talk to our clients, that we're not pricing a pandemic into our coverage. The rates would be ordinary, and we wouldn't.
For sure.
That's not what our product was meant to cover. It was meant to cover displace the normal risks with a default.
Okay, so I guess it sounds like it is covered on people who already had policies in place, but then it's been reformulated perhaps with the pandemic in mind. So are there limitations to those? Are there exclusions? How does that work out?
Yeah, moving forward, and it's just like any operator would do, is you're going to go through your normal screening to make sure someone has the income, right, to afford to live in that unit, right? We don't really see it too much of a risk moving forward, even with the exclusion, and our clients don't either, because they have to still meet their normal screening, show employment, right? Because you have to show that you can afford to be able to pay rent. So it really hasn't been an issue for us moving forward in that way.
Okay. We're getting a little ahead of ourselves because I know I want to ask some really specific questions about the product and how it works. So let me just bring up, there are some alternatives out there similar to what you guys are doing. One of them you've already mentioned, surety bonds. So what's the difference between LeaseLock and surety bonds?
One word, math.
Okay.
So it actually is very simple when you kind of boil it down to math. And we all know surety bonds have been in existence for about a decade through SureDeposit, brought it to market. There's been another formats that have done some slight tweaks to the pricing and the coverage, but it all is pretty very similar. The issue with surety bonds is there's not enough premium collected upfront to cover the average claim at scale. Total premium going into that fund and claims coming out, that's a loss ratio. And somebody's got to pay for that. And guess what? The reinsurers won't, that's not sustainable. So what you have is a lot of these providers coming to market that kind of put a new logo on SureDeposit. They are really create a new kind of modern application out of system, but the math is still the same. They're not sustainable. LeaseLock is different because we are not a surety bond. So we've done the math to structure this and bring a new insurance product to market called Lease Insurance. Not to be confused with renter's insurance. Renter's insurance, right, covers property and some liability, right?
Of course, yeah.
We cover the lease contract and the rental stream associated with that contract and excess damage if that occurs. So when you asked about, is the $30 monthly? Yes, it is. And renters love that because it displaces the big upfront. So that's a win over there. And we see it in the data of increased lease conversions versus pre-LeaseLock, post-LeaseLock data. So there's no issue with that. It's the way that the modern consumer works. They just want to kind of pay as you go. But that $30 that we get in monthly affords us this ability to have this larger claims fund that is much more sustainable to pay out the average claim that multifamily really needs when there is something that goes wrong with the rent stream or there's excess damage. So we've really done this in a sustainable way. We sat down at the tables with the top operators over a 3-year period since we launched in 2016 with our first version. We've really gone on a 3-year exercise to understand that and bring something that would be sustainable.
Okay, terrific. That's a really good description there. So there are some other alternatives out there. I had on my show about a month or two ago, Casey Winter from Obligo. Perhaps you're familiar with them. And they have a little bit different of a solution. I won't go into what that solution is, but how do you differentiate LeaseLock from someone like Obligo?
Yeah, very clearly. Obligo is essentially writing an IOU. And the issue that we hear about that, right? So they displace that upfront deposit. I believe there's a small monthly fee of some sort, and then they can authorize a direct pull from the renter's account kind of post move out. That's risky, or at least our clients are telling us, because sometimes when you go fetch those funds, they're not there. So now you're really depending on an IOU format for that model to sustain itself. And we're just hearing that that's a tough sell at scale to the big operators to rely on that behavior. Where with us, it's backed by A-rated insurance, and you're going to get the $5,000 if you need it. And we've gone through all the pains to structure this as insurance to get the gray stars and these top operators comfortable with deploying this, because we want to get rid of deposits. So that's kind of where we have a very different philosophy on how we approach this market and how we install it.
Well, and you offer the additional rent protection, like your your zero deposit covers more than just security deposit. I think Obligo pretty much is just, hey, no security deposits, right? You as a landlord get your funds, the right away, or get the refund done right away, and then we kind of handle the rest. So it's a little bit different for sure. Property management brainstormers. Have you heard of Square? I've been using Square to run payments through my business and thought you would be interested in it too. You can do a lot with Square. Accept credit cards, power your business with a free point of sale app, get real-time sales reports, and much more. All this with no sign-up costs or long-term contracts. It's perfect for property managers and landlords who want to accept payments of credit cards in the field with their smartphones. Plus, if you follow this link in my episode notes, your first 1,000 in credit card transactions are processed for free when you sign up for Square. Square has really helped my business, so try it for free today. One of the insurance products that we use in our business as a property management company, we have a vacation rental side of the business, and you may know where I'm going here. We call it damage protection insurance. It's a little bit different. It's protection when somebody stays in one of our vacation rentals from incidental or accidental, accidental damage to the property. We had one property where a vacation renter, a little boy, came up with one of his toys and scraped it across the high def TV, the LCD TV, and so had to be replaced. And damage protection insurance paid for that. Now, one of the challenges with that kind of insurance is that we have to file a claim, right? And so in the meantime, who pays for the damage? So it's one of the challenges we've had with insurance related products. I'm kind of curious how that works with LeaseLock.
Yeah, we're a technology driven company, and engineering is our largest team at LeaseLock. We're powered by insurance. And this is kind of the modern new insurtech kind of category that's under this broader fintech sector that's really taking hold and disrupting the world. And so what we're doing is we're using our deep integrations with property management software systems to look at the data related to the move out ledgers, right? Because that's as fast as you're going to get it, right? Like they go do an inspection, they itemize that, it's all recorded in those systems of record.
Yep.
We go tee up almost an automated claim. And so we do everything up into kind of that last click where that central receivables team, and at our biggest enterprise clients, they have central receivables teams rather than having this operated at a per property basis, that they can just fire off that claim and we pay within 14 days.
All right. So the claim would be if I move out a tenant and there's damage to the carpet, they didn't clean the property. We have all these different deductions that have to be taken out of a tenant's, what used to be the security deposit. We would file that claim and then that gets paid within 14 days.
Exactly. We just tell properties, follow your normal, they call it FAS, final account statement, where you're itemizing what is owed, the final balance, right? Based on rent and damage. And legally, you have to supply that, right, to the ex-resident in a certain amount of time, so they have the chance to pay it, right? You have to give them, and so that's the same rules as LeaseLock. Give the resident a chance to pay what they owe because they signed a lease agreement. This is not insurance to them. And then when they don't, when there is a balance there after they've been given the opportunity to pay, then it gets shipped into a claim. And so we automate all that right within the native workflow.
Okay. So the tenant applies for the insurance, I'm assuming. Is that correct?
No. So the tenant is not part of the insurance at all. The tenant is just a deposit waiver fee of $30.
I see.
Yeah. And it's kind of a two-sided model in that way, because the resident is, unlike surety bonds, not party to the insurance at all, right? They are just paying as part of a program to waive that deposit. And some of our operators are even getting more savvy and are like, look, we're not even going to have a deposit waiver program. we're just going to account for this on our back end accounting separate from base rent. They do things like amenity fees separate from base rent. And so they're calling this another financial amenity. It's all added up and surfaced as a total to the renter that they see on their rent bill. That's an implementation too, but the resident is not party to the insurance.
Okay, maybe a good place to go would be take us through kind of soup to nuts scenario. I'm a property manager. I could be your average landlord, whatever. And I've been showing a property. I've got an applicant who I'm ready to approve. I'm ready to go to lease stage. Take it from here with LeaseLock.
This is probably the simplest answer because we hide all the complexity underneath the hood. You market your property as zero deposit. You're going to get a bunch of leads. They're going to apply through your standard screening process. You approve them. You wipe away any requirement of deposit or guarantor that you would have had otherwise. They're paying, along with rent, that $30 fee, and you're now covered for $5,000 in lease insurance.
Okay, and are they paying that to us, the $30?
We collect it, through your normal, whatever your normal property management payment workflow is. There's no separate billing process. It's all, they would pay it along with rent. Like utilities could be a line item, right? You would see deposit waiver. And there's a couple different ways that can be surfaced. But by and large, that's how that's displayed.
And how is that property then activated to turn on the insurance? Is that then done by the landlord? Does it happen automatically by including the tenant in the program?
Yeah, it's seamless. We just turn on the configuration on the back end for that property. And from that day forward, it's a zero deposit property. And it's built natively into the workflow. So there's really nothing, there's no separate side processes. There's no separate application. There's no, there's no off-system things that get in the way. And that's really the big operational difference between LeaseLock and the surety bonds and the big step up here. And that's why some of these leading operators are seeing that's the clear differentiation between LeaseLock and the rest is we know that all roads go through that native workflow. And if you're not in Yardi, you're not in the RealPage suite, you're not in Entrada, then in your off system, you're going to get abysmal adoption. You're going to create a confusion because you have a myriad of leasing staff messaging different things. You're going to get bad reviews because it wasn't transparent with what the resident was getting at the front during move out. And it just fails. And it's not a way to completely change the transaction, which we are here to completely change and simplify, make it faster and more affordable, the rental housing transaction. That's our mission.
Okay. And then during times of vacancy. So if I have one tenant move out, property, I've got to get it rent ready again, maybe it's vacant for 45 days, 60 days, whatever. What happens during that period of the vacancy?
Yeah, you would run your normal operations, right? Instead of having a $500 deposit you might be operating of, you would have $5,000 with LeaseLock once you submitted that claim and we paid 14 days later. So you have just, we make sure that we are tightly coupled around that standard kind of move out process all the way through accounting and ultimately through third party collections because properties still own the debt, right? If it's beyond the claim limits that we provide, they can still go submit that to third party. So we try to be as native in that workflow as possible.
Okay, so it sounds like you're counting perhaps on the property management software platform to provide information as to when properties are occupied or when they're vacant, and then what the landlord would owe in terms of the kind of ongoing monthly payments to LeaseLock. Is that correct?
Yeah, because that's the system of record that they run all of their accounting processes and all their operational policies. So we're just following similar suit with these enterprises.
Gotcha. Okay. I noticed Appfolio is not on your list, and I know they are kind of known for not necessarily playing well with others. Is that something you guys are working on? Is that something you might have in the future?
Yeah, no, we have a relationship with Appfolio.
Oh, you do?
Yeah, we do. And we're located in Marina del Rey. They're just up the road up in Santa Barbara. So Goleta right there. So they're our neighbors. And so we know those guys. We love working with them. And we do have properties that are that are on
Okay.
Appfolio, so we can handle those.
All right, fast forward now to the end of the lease and the move out. So the landlord property management company does a move out inspection. Maybe the tenant's there. They identify some areas of damage that there have to be charges for. With LeaseLock, what happens then?
They move out. You give them the final account statement that says what they owe, right? Rent and damage. That's very clear. Give them an opportunity to pay that. They still owe that, right? So the insurance shifts once they don't pay. Once they don't pay, that's when the property goes and files a claim with LeaseLock. Now, if we pay a claim, we do own that debt, right? That's subrogated to LeaseLock. But the part of our business model is not to go after the resident.
Okay, so as a landlord, then am I obligated for some period of time to try to collect from the tenant before I can make a claim with LeaseLock?
Just that normal standard notice period, which is close out your final account statement. The big corporate guys run that through an audit. Might take 24 to 36 hours to run that through an audit through their receivables team, mail out the notice. And then there's like 30 days, usually standard between mailing and receipt, and then giving someone a chance to pick up the phone and make a payment or mail a check. So yeah, about 30 days is standard. Just given all that, the normal workflow, legal workflows that are there to clear out a balance.
Okay. So then in the meantime, if the landlord is trying to get their property rent ready again, they're paying out of pocket until they can get their claim filed and reimbursed for that, for those damages?
Yeah, that's true. Where they might have had, at scale, the big property managers, you're talking about $500. So on average.
Yeah. So that may explain your target market because, the way I run my business, I mean, most of our owners own, between 1 and 7 properties. And for them to pay out of pocket, say there's a couple grand, who's going to pay for that, right? The owner doesn't want to pay out of pocket. They think that the tenant should pay for it. So it's a little bit different. But if you're talking about sort of a high rise corporate, tens of thousands of units, then that makes complete sense because they would have deeper pockets to be able to handle those kind of turnover charges.
Yeah. And the alternate is, I'll have 30 days of kind of a tighter capital that I would have had a deposit collected in 1 month. But the benefit is now you have multiples more to come behind it to cover you, because those extreme losses, when you are missing 3 months of rent, are what kill you. So there is a little bit of trade-off in that working capital. But the belief is the upside you have in this $5,000 that will cover those big meaty losses will far outweigh, that 30-day kind of working capital tightness.
So an implementation, is it a requirement for most of your clients that the tenant do this? Or what if a tenant says, no, you know what, I don't want to do it this way. I just want to give you the $500 deposit. Can they do that?
You know what? Yes, they may opt out. So it is not a mandatory or required product. And I'll let you guess. How many people do you think opt out percentage-wise?
Oh, probably just a few, maybe 2%, 2 to 5%, maybe.
You're about right. It's about 95% conversion. And we go back and we say, well, why did these 5? Because we talked to the properties. What happened to these other 5%? And you know what they tell us? Oh, we got a new leasing agent in. They came from a non-zero deposit property and they took out the zero deposit charge code and they put in a deposit.
Didn't know what it was, forgot to offer it, whatever. Yeah. Well, yeah.
They didn't have to offer it. No, they went out of their way to take it out. And the resident actually we would go back and say, well, what did the resident, they actually would have preferred LeaseLock, but the agent just wasn't trained not to take it out. So it's fascinating that it just happens automatically. And from a resident standpoint, they love it.
Where are you operating at this point? Are you like to offer insurance products? Do you have to be authorized in every state? And are you there yet?
Yeah, we're in all 50 states. And we are a insurance company, and we have the backing of the large A-rated carriers out there. So the product is here.
So name names here. Who are some of the carriers? Like, are there multiple carriers? Is there one particular underwriter?
Yeah, we have a syndicate of carriers behind us. So we've gotten to this scale where it's not just one. And yeah, we like to have an assortment there. It just creates, more stability. But they're all A-rated carriers, so that speaks to their balance sheets.
Hey, Derek, I always like to ask my guests to tell a story. I like to do this when I meet new people, and I don't know if you're prepared for this, but is there a story you could share with our listeners about kind of something in your background or in your life, either your personal life or business life, that's had an impact on you, maybe how you go about your daily life now or how you practice in business?
Yeah, I mean, I can tell one that's kind of close to home here. We talked about, our mission at LeaseLock is one around, our explicit mission says, we help the world find home. Because at the end of the day, when you get up in the morning, you want to figure out, okay, what am I doing here? What's driving me? And I worked in ad tech, before. So sometimes it's a little bit tough to wake up in the morning and figure out what gets you excited about that, right? So it's really great to be able to work on a product and deliver it to market that has such a great mission. We used to leasing offices would send people that were screened and had a high deposit or a guarantor requirement to leaselock.com. So we looked kind of like one of the surety bond or rent guarantees before in 2017, 16, 17. And so they would go through an application process. We would ask, right, like 10 pages of different questions, Social Security, run a credit check, financial documents. I mean, it was terrible. But it was our first version of understanding.
Yeah, you'd sort of have to do the pre-screening, if you will, to provide any insurance.
Yeah,
right?
Exactly. Because we wanted to kind of, exactly, like know what risk we were backing, and we weren't integrated, and our insurance didn't really trust us yet. So we had to go and show that we're backing good risk. And we developed our own underwriting model. We actually just kind of looked at actual cash flows through people's checking accounts. And there's services out there, fintech services like Plaid, that allowed us one-click logins just to pull data and do that. So it makes it easier too. So long story there is we were a model where we had a direct kind of communication with a resident. And there was a mother, she was a divorced single mom, and she had 2 kids, and she was really in between things. And she's talking with our support person because they're gathering documents, and they always tell us these heartwarming stories around their situation. And we found that we were her last resort. She was in a bind and she didn't get this lease approved and could move in, get the keys. She was going to be in the car with her 2 kids that night. And so we did everything we could to just get her approved. And that was in the very genesis, early beginnings of understanding what we were doing and how we were mission driven at LeaseLock. And we felt really good about that. And we've continued to figure out how we could extend this mission by really just offering this at scale.
Well, it's a cool story. As you can imagine, I talked to a lot of people in the industry around property management, being a landlord, services that are provided. And it's amazing how many people have found their way into this market, into this industry based on personal experience, kind of like the one you talked about with your co-founder earlier. Like, hey, he was trying to get an apartment in New York, couldn't do it. Something's messed up here. What can I do to help solve this problem? And there's hundreds of stories like that, but in different segments. Really cool technology. Great information. Thank you, Derek, so much for coming on the show. Any last parting words you'd like to have for our tenants, or you can provide any tips or any information?
No, I would just continue on what you said as a close. And it's really not about what we want. It's actually what the market demands moving forward. And the new generation of renters, they're the ones growing up enabled with these lightning fast transactions and experiences that the Googles, the Amazons, the Facebooks, Apple are delivering. Guess what? That's table stakes now. So you actually need to elevate and think we're 2 steps ahead just to be at par. And so that's what I'm going to kind of leave people with is think about, right, that it really is a new environment in both what COVID is accelerating. I saw something in Wall Street Journal. They said, COVID accelerated the world into 2030 in 3 months.
Leasing a property shouldn't be that different than, this is a little bit of a stretch, but like booking a hotel room. I can do that over the phone, assuming that there's room at the hotel.
That's a perfect way to put it.
Hey, and if someone wanted to learn more about LeaseLock, being a client of yours, or having you guys as a partner, how would they do that? Where would they go? What number could they call? What website?
Email me. I'm at Derek, DEREK, at LeaseLock.com.
It's a direct line to the man here. So guys who are listening out there, take Derek up on his offer, learn more about it. It sounds like a really interesting solution. Derek, thank you so much for coming on the show. This is a terrific episode. Lots of good information. And thank you for all the thoughtfulness you put into your answers here today. It was super, super good information. And so as we wrap up today, I'd like to make another quick plug to our listeners to click on the subscribe and give us a like. Please also pay it forward, if you would, with a positive review to help encourage more great guests like Derek to come on our show. And that concludes today's episode. Thank you for joining the Property Management Brainstorm Show. Until next time, we will be in the field working hard for our clients to keep properties managed properly, maintain top tenant relations, and we will catch you next time.